Thanks very much, Adrian. Good morning, everybody. Welcome to the start of another week. A week that promises a lot. Optimism seems to be improving. We had some fairly decent numbers last week. All looks a little rosier. Certainly a little rosier than we all expected at the turn of the year. I think the markets had discounted some pretty dire news, and really what we're seeing is a realization in the markets that it's not turning out as dire as some people were predicting. I mentioned to you at the beginning of the year that what would be the grounds for optimism, certainly in the UK, as inflation started to fall, it was likely that consumer confidence would pick up, and we saw that last week. Do you remember the retail sales that came out last week? That was better than expected, a lot better than expected, actually. So there are grounds for optimism. In the US, we had some pretty good housing stats that really propelled the market higher. So we had a generally pretty positive week for equities, really, all in all. Bit mixed otherwise on US dollar and currencies. Precious metals, they were mixed as well. And what's interesting, I'm just going to see if I can get a chart up here. Let's just get a daily. I wonder what this one is here. Okay. Let me just see if I can show you an index here, just so you can see exactly what we've been doing here. Hang on a second. Let's put in. I want to put up the Nasdaq because someone this was mentioned this morning. Actually, that's not right. Control S. Let's put in dollar NDX. This is just the symbol for the Nasdaq. Okay. Let's just change that a bit. Excuse me a second. Okay, I'm just putting up the Nasdaq chart. This is an extraordinary run that the Nasdaq's been on, or we could refer to it as the Apple Index. The market has just had an astonishing rally, really, since before Christmas. I'm going to put up the monthly chart because it's quite interesting to look at the monthly chart. The reason why I'm showing you this, in fact, it's not refreshed enough. So let's see if I can refresh it a bit more. Okay. This is a monthly chart here, everybody, on the Nasdaq. So you can see we're really punching back to levels we were last at in February 2001. It's an astonishing move, really, and something that does underline the strength in the US economy and in the US markets, certainly in comparison to the likes of the FTSE and the DAX here in Europe. This is the FTSE. As you can see here, we've got a long way to go before we even retest the highs from 2011, let alone try and test the peak from 2001, or the turn of the century, when we hit 6,800. So a long way to go there. But nevertheless, still looking positive. Okay, news. Well, over the news last week, that was all Greece, very much still in an event-driven market. But we can all see the end game here, and as a result, and I'm sure Adrian's been mentioning this to you, we've had better results in the trading, not so event-driven. Is Greece going to default? Yes, she will. No, she won't. There's a lot better flow now. So we're seeing some better opportunities trading the markets. And as I said to you, and I'm sure Adrian's reminded you, we can only trade what's in front of us. And I've not seen such poor markets in my time trading since the early 80s, really. Sure, we've seen some very choppy times, which, come and go. But that's just, trend signal takes into account volatility by just widening the bands, and that's when you reduce your stake. But this is just, the markets are just so erratic, which is sort of just shows you how important this whole Greece thing is. Okay, let's just put up some windows here, just see what the headlines are. Iran struggles to find new oil customers. No, that's not really what we're focusing on today, although it is an issue if you're trading oil. Eurozone seeks central bank help in bailout. That's really what we're looking at there. Asia stocks come off highs, and I'll refer to the Chinese interest. It's a monetary policy easing there. And obviously the other key point here will be investors focus on Athens here at the bottom there. So really, that'll be the focus of our markets today, exactly what's happening with Greece. Before I get on to that, the overnight news, we've had some fairly positive news out of China. Here you can see the headline here, China eases reserve rules ahead of key data. Basically what's happened is the Chinese, or the People's Bank of China, have cut the reserve ratio requirement. The reserve ratio requirement is the amount of capital that Chinese banks have to have on their balance sheet to support their loans. And that's been cut by 50 basis points. 50 basis points is 0.5%. And this will bring the ratio down to 20.5% for the largest banks. And what that does, it basically means that the capital they've got on their books, they can now increase their lending. And some bright economist has worked out this could result in an increase of 64 billion in new lending. And this is all down to the Chinese authorities' attempt to try and engineer a soft landing for the Chinese economy. We've seen growth slowing, but unfortunately inflation has remained quite high. So there's it's a tough one to manage that. But certainly this is the first cut in the reserve ratio in 3 years. Well, following on from the first one in 3 years in late November, and that reversed, a number of increases last year in an attempt to rein in inflation. So really, the markets were quite positive on the back of that. But really, the other main bit of news, obviously, is what's happening in Greece. We've got this meeting in Brussels today. And it seems likely, I say seems likely, that this deal will go through. This is the 130 billion rescue package for Greece. And it's been a long time in coming, anything up to 8 months this has been worked on. We've know to our annoyance, I guess, in terms of market trading that they've attempted to go. Papademos has gone to Brussels, been told to go back and work it out again, get another 350 million euros in cuts sorted, go back again, etc. But it looks like this is going to be resolved. The reason why it needs to be resolved now is that the bailout, for it to go through, a lot of what's going to happen involves a debt swap. This is swapping old debt for new. Effectively, this is the PSI initiative where private bondholders are going to take they call it a haircut of 70%. Well, it's not a haircut, it's a massive cut. Nevertheless, that's part of the deal, and this process needs to start in a couple of days' time for the whole thing to be for all the paperwork to be done, so that the whole bailout package is resolved properly in time for the 20th of March, which is the cut-off date. So we don't see it being delayed today. I think it has to go through today, otherwise the markets will not take kindly to it. And in terms of the market reaction, I think we factored in most of the positive news from this, and I think it's a US holiday today, and I think a lot of the moves that you're going to see will be fairly muted, but the markets are positive, not just on the back of the Greek news, but as I said, from that Chinese monetary easing where they've cut that reserve ratio requirement.